All right, all right. What's going on, party people? This your man Griff. Hey, welcome to another video. This video here is about the tax season. Okay, we're gonna be talking about the 2021 tax season and what notaries need to do to get prepared for it. And I know right now all of y'all are getting all geared up and like, oh man, what Griff got to say? Griff ain't got nothing to say. We're gonna bring in the tax expert, Mr. Rob Turner, my accountant, the only accountant that I've had for my whole entire adult life. And
That's
I'm
right.
54, so that should say something to y'all. So Rob's going to come on and he has some items that he wants to discuss to help notaries understand some of the basic things that they need to do. Now, let me say this here for you senior notaries who feel you got it all together or have it all together. Don't be all in the comment section by, well, I know to do this and I use this software and that software. He understands that. I understand that. The world understands that you use this software, that software, and the like. But there are people who have not gotten to that level yet. And this information is for them, as well as something that you probably could learn also. So rather than being critical, open your mind, hear what needs to be said. If it's stuff that you already know, that you already got established, then you don't have to worry about making any crazy comments. And lastly, if you already have an accountant, stick with them. Nobody's saying you got to use mine. Nobody's saying you got to leave yours. All we're doing is because I have a relationship with my accountant, I'm bringing them on to talk about this. If I had a relationship with a different person who was my accountant, then that person would be on. Okay. So all of that housekeeping stuff is out of the way. No crazy comments and all this, that, and the other, fussing about what this, that, and the other. Everybody's heart and mind is clear. Now let's get to it. So we have our man Rob Turner from Pay It Professional Accounting and Income Tax. He's been my accountant for over 20 years here in the Virginia Beach, Virginia area. He's able to help people in all 50 states. And from this point, I'm going to be quiet and let him give an introduction of himself, his background, so you will know who he is from him himself. Go for it, Rob.
Okay. Hello, everybody. I'm glad to be here. Glad to provide some information for everybody. The big part of, well, let me start sooner. I am a former IRS tax auditor. I was a field auditor, but I'm by nature a helping, giving, sharing person. So I got to a point where I couldn't freely help clients because the nature of the job. But now that I'm on this side of the table where I choose to be, I am freely able to help folks and to put them in a better place. Having said that, um, be leery of what friends, relatives, and coworkers recommend that you do if this is not what they do. And so today we'll just be talking about some, being we right at the edge of tax season. I'll just be talking about some things that get help you get ready for whether you come to me or whether you go to a different accountant, but to help you get better prepared. So when you get there, you'll be able to maximize what deductions you can and pay the lowest amount of taxes that you're able to pay. So I'll just jump into it. And, first, the first subject we'll talk about is just being getting ready or prepared for the tax season. So the first thing I'll be talking about is, uh, you have some time now before the end of the month is when the 1099s and W-2s, if you're still employed, required to be in the mail by the 31st of January. So in the meantime, you have some time to either compute or to reconstruct your business miles. And just so that you're aware, those of you not, for the year of 2021, if you're using a standard mileage rate, you're able to get a deduction of 56 cents a mile. That may not seem like much, but if you start to multiply that times your number of miles that you're going, so at 56 cents a mile, you if you have gone 1,000 miles for business miles, business miles for the year, that gives you a $560 tax deduction. but let's multiply that because I'm hoping that many of you have, doing a lot of signings. So let's say you're up to 10,000. Well, that's a $5,600 tax deduction. So again, I can't recommend enough that you do a real good job and keep track of with your business mileage, because oftentimes we uh, that's just one of those things people don't tend to keep track of, and you get to deduct your mileage round trip. So if you're going to visit a client, you get to deduct the mileage going to the client as well as your return trip. And also, if you're going to the bank, if you're picking up, uh, office supplies, if you're uh, any trip that's related to business, um, is business mileage. And so there are several applications out there that you can actually put on your phone that, uh, would make this easier. And I don't, uh, necessarily recommend any particular one because everybody has different phones, different apps that they prefer. So long as you have, chosen which one works best for you. But I would recommend that you put an app on your phone, and that way that would actually help you keep track of your business mileage. And because again, you want to get all of the deductions that you are entitled to. So again, for the year of 2021, that standard mileage rate is at that rate, 1,000 miles gets you a deduction of $585. And just as before, if getting up around 10,000 miles, that's a $5,800 and $50 tax deduction. So I can't encourage you enough that you uh, keep track and uh, list all of the mileage that's business miles that you could possibly list.
Okay, and just wanted to hop in real quick. You had froze up there, so just to reiterate, you had froze up right when you were saying it's a $56 per mile tax deduction that we record as we track our mileage for the
Oh,
year.
okay. Yeah.
Yeah.
So
Okay.
in 2021, the standard mileage rate and is 56 cents a mile. So just to help you get a sense of that, for every 1,000 miles of business mileage that you travel or incur, that's $560 of tax deduction, which lowers your net income, and you end up paying tax on a much smaller rate. And so, if you utilize the standard mileage rate, it saves you from having to keep up with every little piece of paper for gas and tolls and uh, uh, it's a much more simplified way to keep track of automobile expense. Um, and so the next thing I'll go into is it's time to compute or reconstruct the number of notorial notorial signings. That's a mouthful. Yeah, based on which state you're in, each state allows a different deduction for your actual signings. So the fact if you're able to keep track of those, you get a actual uh, tax deduction for the actual your actual signings where you signed and put your seal. So each of the signings you have, um, they may average anywhere from 8 to 10 signings for your notarial acts, each time you have to use your stamp and put your signature. So it's real important to keep up with the number of signings you've had for the year of 2021, because for those notarial acts, they're not subject to self-employment tax. So you want to, keep track of those. Um, And as an overall comment, it's time to be gathering and compiling all of what income as well as business expenses you've had relative to the uh, mobile notary or signing business. I suspect if you have over $600 from any one particular company, that they'll be sending you a 1099 NEC, showing how much they have paid you for the year. But even if it's less than $600 from, it's still a good thing to report all of the income. And the reason I say that, your income on your tax return is what qualifies you to buy things. So the more income you have, the more uh, qualified you are to buy things such as vehicles, houses. So I recommend that you report all your income, but also report all of your expenses. And so, that would include, all of your startup expenses as well. Many of you, this is the first year that you have gotten into this business. And I'll just kind of go down a list of several of what I consider to be startup expenses. If you're just starting up for this year and you've, had advertising, um, any kind of brand development, developing your brand for marketing, for social media, business cards, flyers, stationery. Um, if you've had to get some kind of business insurance, uh, business license or permits you've had to get, if you've had to acquire laptops or computers or different kinds of software or applications, the cost you've incurred to acquire a domain or web development, if you've had to pay any franchise fees or startups, internet setup deposits, any kind of legal and professional fees you pay to an accountant, an attorney, or those kind of things. Um, any kind of machines or equipment, excuse me, that you have purchased to help you in this business. Um, again, marketing, again, office equipment that would include PCs, laptops, monitors, printers, software, and any kind of applications. That also will include any kind of office furniture, be that desks, chairs, tables, bookshelves. Um, if you actually are working out of an office, that would include the security deposit as well as the monthly lease on that office. And it definitely would include any kind of office supplies you've had to purchase. And if you do have an office, that would include, uh, your lease or rent on the office, as well as, any kind of consulting fees related to operating the business. Uh, and I mentioned earlier, any kind of social media marketing or expenses you may have incurred, your telephone, and any other tools or supplies that you may have incurred. That's a pretty good list, but it's not an all inclusive
Mm-hmm.
because everybody business is a little bit different, and we all do purchase and acquire different things that we feel like would help us in our business. So same thing would apply to you. You're likely to have incurred some expenses as long as there's a business reason for acquiring those expenses. You're to keep track of the receipts. Now, the big thing I want to share with you, you should be receiving all your income as well as paying all your business expenses through your business account. I can't recommend that enough, especially if you have become an LLC, because one of the agreements that you have uh, agreed to in becoming an LLC is that you would not mix or what's called commingle your business and your personal financial lives. And
Correct.
by that, I mean, let's say you've done several closings this month and I'm just picking a number. Let's say you got several $1,000s in your business account, and your personal car payment is due, or your personal mortgage, or your utilities are due. If it's not a business office, you should not be paying your personal bills out of your business account. You need to either draw money out of the business account, put it into your personal account, or at least keep a notation of it, and then pay that separately, but not pay personal bills out of your business account. Now, when you're starting up, you don't actually have business and you haven't, started a business. So many of your startup expenses had to come from your personal account. But once you get started in the business, you want to totally keep your business and personal finances totally separate. Uh, and so, uh, you know, and if you don't do that, IRS and the state are permitted to disallow you from being a LLC, because in becoming one, you have agreed to not commingling business and personal money. Um, and that is the LLC is what gives you protection from personal liability if someone were to sue you. And uh, that's one of those things you got to be careful of, because you may go on, to a client's to do signing. You meant to hit the brake and you hit the gas and you ran over their mailbox or you tore up something. So you know I can't emphasize enough to keep your business and personal accounts totally separate.
All right, and let me ask this question then on that point. So for a new notary just coming in, and they're sort of, as the term, bootstrapping their business, and they're like, okay, I got this money that a family member gave me, or let's just say a parent, a parent is trying to help out, and they deposit money into their personal bank account so that they can say buy some paper or something to that effect.
Correct.
Now, most people will ask the question of, well, if I spent money from my personal account, how do I count that as the business? And my understanding, I would assume, and you can correct me if I'm wrong with this, and we can go in depth a little bit more afterward.
Right.
I guess you would say take that money from your personal account and put it into your business account so you can then purchase said item, and then it can be viewed as a business purchase.
You're right on point with that. And so um, you want to, just as I spoke earlier of needing money from the business to pay personal, you take it out of the business and put it into your personal account. You
Mm-hmm.
want to do the same thing in the opposite direction. So if you have money in your personal account and you need to buy some business items with it,
Okay, you froze up there a second. Now, hold on for 1 second. He'll be right back. You froze up there.
okay, so
There we go.
when that is the case, take the money from your personal account, put it into the business, and pay for that item from your business account.
I understand.
Uh, Sometimes it may seem like a bother, but if you happen to get audited, you want everything to look, as they say, decent and in order. You want things to look proper. So
Correct.
it may take an extra step to stop by the bank. And now, if your accounts are in the same bank, it's just a matter of going online and moving the money from one account to the other.
Correct.
And so I highly recommend that, so that you keep your business and your personal life separately.
Gotcha. All right. Go ahead on. Keep going.
Okay. All right. And so, um, I'm going to talk a little bit about business structure. So there are many uh, notary agents who um, are sole proprietors. And so, as a sole proprietor, you don't have any liability protection. In this world we live in now, if you look at somebody cross-eyed or funny, they want to sue you. So, as a sole proprietor, uh, the nature of being a sole proprietor, you don't have any liability protection unless you have uh, got paid for and have some liability insurance coverage. Um, and so it's it's the easiest form of business to create, but you don't have any liability protection as a sole proprietor. And so the next form, which I think many of the uh, signing agents are, they have created LLCs. Uh, and so as a LLC, you have some liability protection as long as, and I can't stress enough, as long as you keep your business and your personal life separately. That way, if something happens while you're conducting business and you're LLC and you have not commingled your business and your personal, then they just get to sue the business, not you personally, and attach your house and all of that good stuff. And so, but also as a LLC, you are not entitled as the owner of an LLC to pay yourself as one of the owners or as the owner. Um, as a LLC, how the owner is able to get money out of the business is they simply draw it out, but they do not get to take a deduction, and they do not get to take a deduction for the money that they draw out. So let's say, for example, that at the end of the year, to make this an easy example, um, let's say your company grossed the amount of money, it paid all of its expenses, and it netted $12,000. Well, the $12,000 is what you would have to pay tax on your tax return. Now, which means every month you could be drawing some of that out to use it for personal. But you still, even though you drew some out, you still would be paying tax on the full 12,000 because that's what the business netted. But you would not get to take a deduction for the 12,000 as the owner of an LLC. You simply would be drawing that out or drawing some portion of it out. Now, as they recommend, let's say if you actually wanted to take a salary from the business, you would actually have to, you could be a LLC, but you would have to convert to be taxed as an S corporation. And they don't recommend that you do that until you start to net somewhere around $40,000 to $45,000. Up till then, um, it's fine to be a LLC and not be taxed. Uh, um, not be able to deduct salary. But to keep in mind, the minute you start to deduct salary, now you also incur some payroll taxes. And so, um, and so, but if you're drawing a salary, you actually get to deduct that from the business. Now, when it comes to your personal return, you would end up with some W 2 salary, just as you would from any other job, and what net income is then left from the business. But you would be getting to deduct the salary that you receive from the business, thereby having a lower income on the part of the company. Um, let's see. Um, that's probably, you know, um, at the end, we'll have a little bit of time for a few people to ask some questions. Um, you know, Another area I want to go into and that is managing all of what revenue streams that you incur or
Hmm.
you have. And by that, I mean, let's say some of you, I recommend that you um, get as many revenue streams as you can. What that means is, just sources of making money. So, um, like my professional accounting and income tax, I do tax returns, I do bookkeeping and accounting, I do payroll taxes. So in my business, I have several revenue streams. So, uh, as a signing agent, there are different things you can sign for. So, uh, and there's different ways of doing it. Like, many of you actually are mobile, where you actually get in your vehicle, go out to see clients, meet at their places of residence or place of business or agreed upon place. But some of you um, have probably been blessed to be in a position where you're in a title office or mortgage company where you haven't had to go out. The business is flowing to you. I would simply recommend that you keep up your qualifications and your skills to be a mobile notary because business tends to go in cycles. So right now, there's a lot of closings. There's uh, as I say, it's a seller's market. So there's a lot of houses being sold. So your services are in demand. But I just kind of recommend keep up with as many revenue streams as you can because let's say as the cycle changes, you might right now be in a title office, but if business starts to slow down and they look at, hmm, things that we're not having as many closings, we gotta, cut some expenses someplace. You might be one of the first persons to have to now leave
Okay.
where you're uh, sitting there getting all these closings, they are likely to, now not give you that office space. So, it's just good to keep up your skills, qualifications of all your different revenue streams so that as one thing changes, or even, um, I know of situations where there are mobile notaries who have folks working for them,
Mm-hmm.
where they actually have uh, hired a consultant to sit in the title office or the mortgage office and handle those signings where they're still out on the road
Got you.
doing additional signings. So, don't ever become complacent and think, "Oh, I got it made now. I'm, uh, I'm don't have to, drive anywhere. I'm, here in this title company." I
So it
just
sounds like what you're saying is also for notaries who are fortunate enough to be in the office to make sure you still have a printer at home that you can print because
absolutely
because if you hit the road, because I've heard of several notaries tell me, well, I work in the office and I sold my printers, I sold all my equipment once they went into the office working in a title company, escrow, lawyer, wherever, and they just got rid of all of their equipment and they can't print nothing at home. But then they may, if things lock down and they say, okay, and this is what happened with some title companies when the pandemic first started. They actually was like, okay, we're going to still keep doing business, but you can't come to the office. So notary, you need to go home. And if you're at home and they can't go to the office, how you going to get your documents that they normally print for you? You
correct.
can't. So you gotta go. So that means they're saying, okay, well, we'll send them to you. And matter of fact, they'll be probably willing to pay you a little extra because you're printing. But if you don't have the equipment and the supply shortages and all of that, you're going to run into an issue and then you won't be able to perform the work, but another notary will. And to me, it's easier to slide into an office. Going from mobile to being in the office, it can be a little more challenging if you're in an office and then you got to go back on the road and you don't have the equipment to support that. That's what I'm hearing that you're saying.
Right. That is exactly. So there's different reasons, and that is a very good reason. Once you've gotten the skills and the qualifications to be more valuable, I just recommend that you maintain those skills and qualifications as well as maintaining the equipment. Don't fall into the false trap that everything is always going to be wonderful. Because again, business, um, I'm sharing with you some years of experience.
Understand, sir.
Don't put all your eggs in that one basket because if that basket leaks or that you drop that basket, you're now uh, pretty much starting over. Because if you
Right.
have sold your equipment, um, now when that company needs some signing, they're going to call somebody else. They're not going to
Correct.
wait for you to kind of, get yourself fired up again. And like right now, because of some equipment, uh, it's not available. So if you have equipment that you need, I just wouldn't recommend that you thinking, well, I'm gonna save money. I'm gonna get rid of this equipment, my space where I do business. Um, so that's just just try to remain or manage and keep open all of what potential revenue streams that you have.
Gotcha. Gotcha. All right. Well,
Um,
I'm gonna start bringing the people onto the stage, but you keep on talking.
okay, that'll be great. My main focus here today was trying to get them in the mindset, since they have some time, to use this time and get prepared for your accountant.
Sounds good. And that's the key thing that notaries need to understand. And again, for those of you who have all of your stuff in place, nobody's telling you to stop what you're doing with those folk and then come over here. If you know all of this stuff, that's great. What I would encourage you to do is help other notaries in your area out. With giving them some basic, not like what Rob said, don't try to do what he does if you're not an accountant, but at least point them into the direction of the person that you're using that has helped you out. Because one of the things it's sad to see somebody happy and joyous and hey, I'm gonna start this business, and then bam, they get hit with the tax bill, or they don't know that they could have taken certain tax deductions, or they don't understand these things. And if you are seasoned and you know this, and you know you have an accountant that can help them with their finances, refer them to that person. And that's why I bring Rob on. And y'all know, y'all don't hear me trying to talk tax stuff myself. I always refer you back to Rob. People will call me and I say, okay, I hear what you're saying, but let me share, but you need to contact Rob or get with somebody in your local area, so forth and so on. Because some notaries say, well, I want to have somebody close to me. Well, asking me, and I'm not close to you, that right there is okay. If you're in Texas and you're asking me about something, then don't even ask me. Just go ahead on and find somebody in that local area and all of that. That's really where you should do. And there's no to say that I don't want to talk to an accountant in Virginia. I want somebody here. While I'm in Virginia, you're asking me to give you a tax advice. That's not the smartest thing in the world. And I'm not going to put myself out there and have liability on me trying to provide some information that may not be applicable in your area. So we're going to start off with Q. He had first hopped in here today. And go ahead on and ask your question, partner.
Q,
Hey, good
Q,
morning.
before you get started, let me share this with you. But my cost is deductible by you. So it's just another business expense. So go ahead, Q.
Hey, good morning, Rob. I appreciate you taking this time for us. Can you guys hear me okay?
Yeah. I can hear you.
All right, awesome. I've got two questions for you. My first question is, I'm just getting started. I got started at the end of 2021. I incurred a lot of business expenses with very little income, actually like next to nothing coming in towards that end of the year. Filing taxes going forward, and I know I made less than $600 in December. How would I handle that and reclaim or try to get some deductions for those business expenses? Would that apply to 2021, or is that something that I might be able to move forward?
Well, do you have other income? Like, are you gainfully employed?
No, I'm not a W-2 worker. No.
Okay, so your notary income was all of the income that you had?
I had some other income, but nothing that I had set up as far as like a LLC or anything like that.
Okay. I mean, as long as you've had some income, you can use the losses. You can, you know, that's why I was asking you if you had other income, because if you've had losses, it would offset or reduce some other income that you have.
Okay.
Um, but you incurred the expenses in the year you actually incurred them.
Right.
So if they're 21 expenses, you want to put them in 21. Now, even though you put them on the return, let's say they're on your return and your return in results in a loss, there's the ability to either carry a loss back to some previous years or to elect to carry it forward. But you gotta make a record of the losses.
Okay.
So you may not end up having any tax liability, but you can elect to carry those losses. So let's say in 22, you done got all your training down, you done become an expert, and you're just starting to generate the closings. So let's say you actually had a loss uh, in 21. We could elect to carry that loss into 22 and offset 22 net income.
Okay. That's something I'll have to look into.
But you got to record, you got to put it on a tax return so that there's a record of it. Does that make sense, or can you follow me?
No, I'm completely following. I'm just
Okay.
writing it down right now.
Because
That's all.
if you don't put it on a tax return, there's not a way to carry it forward.
Right.
Okay.
Understood.
Your other question.
My other question is just, again, starting out, just got my LLC. S Corp is something that I've really been looking at. Now I know I'm in an infant stage and eventually I will be growing. Hopefully this year I will surpass $40,000 and $50,000. Would it be wise to
That's
start?
net income, not gross.
Correct.
Okay.
Would it be wise to start planning for that now? And along with the S Corp.
It's a form that you fill out to do it. So the income
financially.
drives it.
Would it be smart to go ahead and start planning for that?
Well, the only main difference is, right now you're LLC.
Right.
The main reason that you would elect to be taxed as an S corporation is so that you can then start to draw a salary.
Correct.
Okay. If you're not making enough money to draw a salary, there's no preparation for drawing a salary. Either you're making enough to do it or you haven't reached that plateau yet. So we fill that form out and it takes about 6 weeks to get the okay back, and then you can start to pay yourself a salary. But I don't know that there's any preparation that you need to do to get ready for that, because it's kind of like working. You're either working or you're not. So you can say I'm preparing to work, but you ain't got no money coming in. You ain't working. So as your LLC now, just continue, and as you start to make money, then it's time to look at, is it ready to become an LLC? Did that answer your question?
A little bit, yes. And it's something I'm still learning. Again, I'm an infant in this, so I'm still educating myself on it. And I really do appreciate your answer. One more question when it comes to S corps. Now, I did hear from somewhere that the payroll tax is only required once a year. Is that solid information?
Yeah, you can do it once a year.
Okay.
You can get to
that point.
Get to the end of the year and look at it and say, okay, but keep in mind you're paying. Let's say you became an S corp, let's say in April, all right, which means you'd have 3/4 of salary. So keep in mind you need to have been starting to put some money to the side to cover those payroll taxes.
I think that's what I was saying when I mentioned preparing to go S corp. Like, should I already have that mind frame of this is where I'm trying to go? So let's start putting money away from.
All right, now I think I have a better understanding of what you're saying. So if you're in preparation for that, if you want to start to put some money to the side, yes, that is a good idea.
Okay.
But I guess I answered the question in the way I did when I asked you if you have other income coming in.
Mm-hmm.
If you don't have other income coming in, what income you have coming in ain't enough to put to the side yet.
Right. No, of course.
So as you start to earn more money, then to prepare for that. But it's based on you starting to make, upwards of netting, not grossing, but netting about $35,000-$40,000.
Okay. Appreciate it. Thank you.
Mm-hmm. I know somebody else got questions.
Yeah, let's go, Shannon.
All right.
We don't hear you.
Oh, I'm sorry. Can you hear me now?
Yeah, we can hear you. Yeah, we can hear you clear.
Okay, I'm sorry. Okay, so I have two questions. Get out of here, Bear. I'm still a W-2 worker and I run my business part-time.
Right.
I'm a single member LLC. I bought into the hype. Well, I don't know if it's the hype, but I set up an LLC before I had business coming in.
Okay.
And I did that because I wanted to keep my finances from my W-2 separate from my
Correct.
business.
Correct.
But here's the thing, the problem I'm falling to. I don't only do notary work, I also do bookkeeping, and a lot of my expenses overlap. So I don't know. It's kind of hard to figure out how to deduct them on my taxes. And even when I look, I operate out of QuickBooks to track my financials. I'm basically already starting in the negative before I even made any money. So now, like Q was saying, basically I have a loss before any.
Okay, so I ain't gonna ask you a number, but are you making money in the bookkeeping?
I'm focusing mostly on the notary, and I'm just doing bookkeeping for small businesses and family and friends. So I'm not making significant money.
Right, but so what I'm hearing you say is you're just getting going in the notary side, but you're making some money in the bookkeeping side.
Correct.
For at least, and many of those expenses, if you're buying paper, if you're buying a laptop, they could really go in either direction.
Right.
Put them right now. Put at least the bulk of them where the income is coming in.
Okay. Yeah, that was my question.
Okay. So I'm just gonna put some numbers to it. I don't want your numbers, so everybody don't need to know what your numbers are.
Okay.
All right, so let's say for the year you got $3,000 of income from bookkeeping, and you've bought a new $600 laptop. You bought some paper. You bought a printer. Minimize the bookkeeping income.
Gotcha.
I know you also going to use that laptop for the notary business. Okay, but apply the expenses where you have some income. IRS would rather see the expenses against some income.
Gotcha.
Than expenses against, let's say in the notary business, let's say you've only taken in $500.
Right.
All right. And you have an option of whether to deduct $3,000 of expenses. Well, don't deduct the whole $3,000. You kind of got a unique situation. Deduct the expenses where you made the $5,000, or at least most of them. And deduct some against the 500, but don't put. Even though you say, "Well, I'm focusing on the notary business," but you're still actually doing bookkeeping.
Right.
So put the majority of the expenses where you have the majority of the income. The net result's going to be the same. Part of what we're talking about is how does it look? As opposed to saying, well, I only made $500 over here, but I'm going to take $4,000 of expenses.
Right.
Well, I made $10,000 over here, but I'm only going to take $2,000 of expenses. It looked, the net result is the same. Correct? When you add both numbers, they're going to add up, and you add all the expenses. But it'll look better to put the expenses, because the nature of what you're doing is a service. The bookkeeping is a service. The notary is a service. So the equipment and the things that you're buying, until the notary starts to be the bigger, just put them over in the bookkeeping. You know, it, you, some is in one hand, some is in the other. When you put them together, you got both hands. So it's not going to be critically important for you. So your situation is a little bit different than most. Most just have the one notary signing, but you've got two businesses. So put the most expenses where the most income is.
Gotcha.
And then it'll evolve because you'll start to make more money with the signings. Then as you go forward, then start to put more of the expenses on that side.
Okay.
Yeah.
And I have one more question because I am a W-2 worker and I don't plan on taking my business full time for probably a couple more years. I still have a salary, but again, I'm a single member LLC. With those two incomes combined, does that put me in another tax bracket?
Well, it's based on the business is based on net income, not gross. So let's say I'm gonna create some numbers so we don't worry about your numbers. So let's say in your business you're making 50,000 W-2. Okay. Let's say from the bookkeeping side you had a net loss of 1,000. You had the income coming in, you had expenses, but the net loss was 1,000. So now, just from that, when you combine those two things, you're starting out at 49. The 50 in wages minus the loss.
Gotcha.
So let's say you're just getting started in the notary, and let's say the loss there was 3,000. So you have 50 minus 1, 49 minus 3 more. So you're starting at 46 now.
Gotcha.
Now, if there were income, so let's say, things did pick up at the end of the year. So you're starting at 50, your salary, and you actually made $1,000 from the bookkeeping after you paid expenses. What was left over was $1,000. So now you're at 51. But I think you were pointing out earlier, you have a lot of expenses in the notary side.
Yes.
So let's say the notary side, you had a net loss of 2,000. So you started at 50 plus 1 to 51. This other 2,000 loss, you're back down to 49.
Gotcha.
So you combine the net or bottom number, not the gross number.
All righty.
Okay.
I think that was it for my questions for right now.
Okay.
Thank you.
All right.
What you got, Mattherin?
So, all right. Good morning. You guys hear me?
Yes, sir.
Yeah, we can hear you.
All right. I appreciate you guys in here. Thank you so much, Rob, for taking the time out. You may have gotten a few text message and emails from me, so don't. Like I said, I appreciate you taking the time. Just have a few questions in regards to taxes this year. Back in March, we started LLC back in March. And some of the stuff that we paid for as far as like the advertisement. So if I'm filing, so pretty much my wife handles my everything that I need as far as business cards, the laptop, any stuff like that. She usually purchases those. So am I able to put those as expenses, even though the credit card that was used was not under my name?
Yeah. Yes, because they were business expenses that you used in the business.
Okay. All right. So I'll make note of that. And then another question I've had. So this year was I was working a W-2 as well. And I was doing the loan signing, that's why I like the mobile notary services on the side.
Right.
So if I'm filing taxes this year, even though my notary business is now under LLC, do I file two separate taxes, like one for my W-2 and then one for my business, or?
Okay. So you say you is your signing business a LLC, or are you a sole proprietor?
I'm an LLC. We started back in March of this year.
Okay. A LLC, are you the sole owner?
Yes.
Okay. The sole owner of a LLC reports their income and expenses on a Schedule C, which is a part of your personal return.
Okay.
So you're going to add at least two other schedules to your personal return. So it's just basically the same personal return. You're just adding a Schedule C because you're the sole owner of the LLC.
Okay.
It gets reported on the Schedule C. Now, let's say you decided I'm going to have the LLC owned by me and my wife. Okay. Then what you have is a partnership. That is a separate tax return.
Okay.
In your case, you're the sole owner. So it's your same tax return.
Mm-hmm.
You are simply, it's similar to when I was just talking with Shannon. Her bookkeeping is a, a separate Schedule C on her personal tax return.
Okay.
And the mobile notary signing is a second Schedule C on her personal tax return. So in your case, you're going to have your personal tax return. You're going to have a Schedule C,
Mm-hmm.
which will be the income and the expenses of the signing business. It'll become part of your personal tax return.
Okay.
So you're going to have on your personal tax return, you're going to have your wages and then the net profit or net loss from the mobile notary business. And how you get to that number is it goes on a Schedule C, lists the income minus the expenses, and the net amount comes to the front of your tax return.
Okay. Got you. Makes sense. All right. And okay, so the only way, I just wanted to recap, the only way that I will file that LLC separately is if I add someone else to it.
Right. And we're past you would totally be changing what you've done. You've created a single owner LLC.
Okay.
So it's part of your personal tax return.
Okay.
So if you decided to add a partner, then it's a separate partnership tax return.
Okay.
And just so that y'all, I don't know if you actually have a current account now. My software allows me to do this. Okay, we got 50 states, but there's 43 states that have state taxes. There's 7 states that don't have state taxes. Well, I can do all of the states. So it doesn't matter what states you're in. I have clients now, some in California, some in Atlanta, some in Maryland. So I have clients all over. And just like
I'm in
signing,
Massachusetts.
you get calls from anywhere in the country,
Mm-hmm.
and you do the signing. I am the same way in my accounting and tax business.
Okay.
And even my local clients now, because of COVID, many more of them are starting to do, remote. We do Zoom meetings. They send me documents electronically. So COVID is forcing us to look at things a little bit differently.
Okay.
So it doesn't matter where you are. I'm able to either, as you start to grow in the business, I have some clients that I do monthly profit and loss for, which is very similar. Right now, you're a W-2 employee. So every 2 weeks, you get a pay stub.
Yeah.
Your pay stub lists how much you earned for that period of time, minus the federal tax, minus Social Security, minus insurance, so minus deductions.
Mm-hmm.
And so what they put into your account is the basically net income for that period.
Makes sense.
I prepare profit and losses for businesses on a monthly basis. So each month, like at the beginning of January, I'm doing the profit and loss for businesses for December. They sent me how much they could basically send me their bank statement.
Okay.
They send me I get their bank statements or access to them. I can create the profit and loss, list what income they have, minus all the different categories of expenses, and get to the net income. Just as in your pay stub, it's the net income number that you actually can get to use and pay bills with.
Mm-hmm.
You don't pay bills with your gross salary. You pay personal bills with the net that
Yeah.
you actually get after the deductions come out.
Gotcha.
So um, I charge clients $150 a month to create profit and loss. And just like your pay stub, that's what you can look at and make decisions for your household with.
Mm-hmm.
Profit and loss works the same way. That's the document that you can look at based on what's on it, that I can help you make good business decisions.
Okay.
Okay. And again, all expenses people pay me, they get to deduct in business.
Okay, makes sense. So so now another thing, right? We got a car. Like we had purchased a car. So like we financed a car back in maybe April. My wife had surprised me with it. So am I able to put that on my tax return, even
What?
though the
Okay,
finance?
so there's two ways to deduct auto expenses. One, the simplified version is what's on the screen now. If you keep up with either way, you got to keep up with your business miles.
Yeah.
Okay. So the simplified way is simply to take your business miles for the year or for the month or what, but take your business miles times in 21, it was times 0.56 miles, 0.56 cents per mile.
Okay.
When you're taking the standard mileage rate, you don't have to save gas, tires, tune up, oil change. You don't have to save any of that
Okay.
because you're simply using the standard number that IRS has used. When they create this number, it's taking in consideration wear and tear, tires, gas, all of that stuff is built into this number.
Makes sense.
That's the simplified way to do it. The other way to do it is you got to keep up with every gas ticket, every tune up, every oil change, every repair.
Yeah.
You keep up with all of those.
Gotcha.
And then you take the business percentage of them. So let's say y'all got this vehicle. You know, it's not likely you're just getting started that you're going to use this vehicle for more than 50 or for more than 50% of business use.
Mm-hmm.
So let's say you drove that vehicle 10,000 miles for the year. Follow me?
Yep.
Now, you had 3,000 miles that was related to your business. You would have to, again, save all of the gas, the tires, you would get to take 30% of those on your tax return.
Okay.
So you can either save all of the receipts and take the business portion of them
Mm-hmm.
for business, or you can not have to save all those receipts and just keep up with the business miles and take 50.56% of the expense. And again, in 22, it goes up to 58.5%.
Okay. Gotcha. And
Everybody looks at it different. Many people just take the standard and keep it moving.
Okay. And my last question will be, because of all the expenses, because we wanted to make sure that we are like fully mobile.
Mhm.
So what if the expensive is more than what I end up making just because we started like halfway through the year somewhat?
You're going to have some losses.
Okay.
They're going to reduce your salary. So let's say, similar to Shannon, let's say your salary, again, don't tell me because everybody don't need to know, but let's say your salary is 50,000.
Mm-hmm.
and you've had a $5,000 loss because you had a whole lot of startup expenses, your beginning number to fill out taxes is going to be 45. The 50 that off your W-2 less the 5,000 of losses. So you're going to end up paying less tax.
Okay.
The loss helps offset some of your other income.
Okay. Makes sense. Sounds good. And I'm not sure if you already said that, but if you're not able to during this recording, that's fine. I just wanted to know as far as like how much you charge to, file taxes for businesses.
Okay, my standard answer is, how much is the price of a new car? Okay, you're going to ask me, what kind of car is it?
Yeah.
Is it a big car? Is it an SUV?
Yeah.
The question you asked me doesn't tell me anything.
Okay.
I don't know your situation.
Makes
Your
sense.
situation is different from Shannon's. It's different from Griff's. So it's hard to give you a number. When you go to the car lot and you say, I want to buy a car, he's going to say, or she's going to say, what kind of car are you looking at?
Yep. Makes sense.
Is it a four-wheel drive? Is it? So I'd have to know your specifics.
Okay.
To be able to. Now, I can tell you this, because of my relationship with Griffin, I give mobile notaries a discount. Okay. Now, the other thing I do is at the beginning of in this month, we're calling around to all the, all the local tax places and finding out how much they charge for certain forms. I stay under those numbers. So you already know the starting point is going to be less than what most people are charging.
Yeah, makes sense.
Plus, I'm going to give you a discount.
That sounds good.
So
that sounds good. So I'll definitely be in touch because I'm sure that I get this done right for
Right. And so a big part of what I do is, just as in this video, a big part of what I do with clients is I teach you. That I think is the thing that connects Griff and I so well. Is we love teaching people.
Yeah.
We love doing what we do, but in the process, we teach people so that, because I want you to have a better understanding of what you do, the business, like you know the technical side of what you do, or you're learning the technical side of what you do. I'm going to teach you some of the business side of what you do, so that you have a better understanding from the business perspective. As you're going forward, you're going to have a better, and just from today, you're going to have a better understanding, because what I do is teach you. So a big part of what I do, I'm doing your tax return at a discount, but I want you to have an understanding of what you're looking at and what you're doing. So it would be easier for me to tell you, okay, give me those papers, and I work my magic and I give them back to you. I say, bye, check you later. All you know is you got some papers with some numbers on them.
Yeah.
You don't have a clue what they mean.
Yeah, makes sense.
I want you to understand, when you look at your tax return, what that means, so that you have an understanding, because you need that information to make business decisions with. So my job is to help you make good business decisions. So I teach my clients. I have many clients who say, man, it's like therapy when I come to see you, because you take the time. Most people don't do what I do in terms of taking the time with folks.
Yep.
Now, you might ask, well, what's in it for him? You make my job easy if you understand what I need you to do.
That's true.
And I can make your job easy because I teach you some more. So the more I teach you, the easier it makes my job.
Yep.
And the more better you understand, okay, that's what that means. Oh, wait a minute. You mean I can do that? Yeah, so I'll recommend things to you. I never try to tell you, well, you got to do this. I always give you like a couple of options. If you go this way, this the result you could get. If you go that way, you'll get a different result. So I take the time to educate and teach you stuff so that you have a better understanding and make better business decisions.
That sounds good. I appreciate that.
Now,
let me share this one other thing.
Go ahead.
And that is, once you become a client of mine, I share this with all my clients. Don't ever feel like you bugging me. So if you have a question or concern and you call me or email me or whatever and said, Rob, what's the best way for me to do this? And I tell you, and tomorrow you got another question. Call me again tomorrow. Because if you wait till tax time, we may miss the opportunity to take advantage of whatever it is.
Okay.
So again, I take the time to teach and educate you this stuff.
All right, appreciate it. So I'm gonna add up all my expenses for as far as like the stuff that we got today.
Yeah.
Thank you.
All right. Now y'all understand why I am the way I am. Okay. I hang with people, and that's who I learn from. I watch them, and it's not like like Rob sat there and said, okay, Griff, I'm gonna teach you how to act this way. I just watch people and I learned that, okay, that is working for him. That's it right there. To be this kind of a person, to be this kind of a man, to help out others, that's what it's all about. It's not about always trying to sell people the next widget or to get them to hop into the next little thing, but it's to help them grow so that if I decide to leave that industry or if I decide to just do something else or whatever, they can keep going. And one of the things you need to understand about true leadership is that true leaders, as John Maxwell always talks about, make whatever you're doing, the industry you're doing, better than when you found it. And that's a big question. And I got to throw this out there to all you notaries who are looking. If the people you kicking it with, are they really making the industry better than the way they found it? Or are they just making a lot of money? That's the thing. Because if it's not better for you, then is it really better? Because if they left the industry, can you carry on with what they've shared with you? Can you literally go out there and do it? And let's just be honest. If you're educated properly from Rob on the taxes and he decided to retire, I'm sure he'll give you enough information to do one or two things. You'll be able to properly vet your next accountant.
Right.
Or you'll be able to do it yourself.
Yep.
And if you can't get that from somebody, if you can't run it yourself, then did they really teach you anything? Did they really educate you to the level that you need to be educated so you can move forward in what you've decided to do? Nobody decided for you to be in this notary business. You made the mind up yourself and you said, I'm going to do this. So now whether that person existed or not, you still have to do it. But if your only reason for doing it is because you're sitting here tethering yourself to a whole bunch of people or a person, and that's the only reason why you're doing it, you're not going to be successful if they ever move out of your life. It's your floor, Terry. Go for it.
Good afternoon, everybody.
Afternoon, we can hear you good.
I actually couldn't hear everybody because I didn't realize I was supposed to touch the arrow so I could hear the questions.
Well, you can catch the replay.
Okay. So I have like a two-part question.
Okay.
I had to put my commission on hold because of some personal reasons. But one, I want to know, just starting off doing general notary work, can I or should I start off being just a sole proprietorship or should I start off LLC?
Well, I would recommend, each state, the fees to become an LLC are different. What
Right.
state are you in?
In Michigan.
Okay. I find out, but I
Mhm.
try to keep all of them in my head. From the liability protection aspect of it,
Mhm.
I would recommend that you create the LLC
Okay.
for a couple reasons. One, liability protection, and there's likely to be a name that you would like to have.
Mhm.
So if you go on and secure that name, it's your name. And so if you become a sole proprietor, and then later you say, well, I think I'm gonna become an LLC.
Mhm.
Somebody may have taken the name that you wanted to
All
use.
right.
Because let's say if you right now are ABC Notary, if you become an LLC, you could become ABC Notary LLC.
Mhm.
See, so you could be the sole proprietor, ABC Notary. If somebody becomes ABC Notary LLC, you can't take that. And their name is now too close to yours. So I would recommend going to become the LLC so that you have the liability protection.
Okay.
You know,
And then my
being in
second, go ahead.
there's slow periods in business. Like I said, business goes in cycles. So
Mhm.
things always come up, but still you own that
That
name, that brand. Um, and so I think it's a good idea to go on and own the brand that you would like to have.
Okay. And then my second question is, if you're like I work a full-time job,
Mm-hmm.
um, if they send me home and I use my second bedroom as my office,
Mm-hmm.
um, can I write off like office things as far as utilities and things of
Okay.
that nature?
Yes. So
And but
how that
mhm,
works is kind of like mileage. There's a simplified way to deduct office in the home.
mhm,
The simplified, well, either way, you got to use that area exclusively for business.
okay,
So if it's your bedroom and it's still your bedroom, you're minimizing how much of that room you use for business. So let's say your bedroom is 20 by 10. So that's
mhm,
the or let's say it's 10 by 10. That's 20 by 10.
mhm,
That's a huge room. So that's 100 square feet. But if you know you actually still got a bed and a dresser and some stuff in there, you ain't using 100 square feet of the room.
all right,
You know, figure how much of the space you're using for the business.
okay,
Okay. So if that's the case, the simplified way, you get to look at how much square feet you're actually using times
mhm,
$5 a square foot, and that's the amount of office and the home expense you get to claim for the year. The max you can take is um, based on 300 square feet. Okay, so 300 square feet times $5. So you're if you take the simplified method, uh, you ain't got to worry about utilities, none of that. You just take the
okay,
square footage. So you could take up to a max of 1,500 for the year.
okay,
The other way, you gotta uh, again take the square feet in
mhm,
proportion to what's the total square feet of the house,
mhm.
and then you start taking what's the business portion of, like, are you buying your house?
No, we actually live in an apartment.
Okay, so you're not writing off the interest and taxes, so you could take
Mm-mm.
the business portion based on the square feet. So let's say it's 100 square feet that you use for business,
Mhm,
and there's a in the apartment is 1,000 square feet. Then
mhm,
10% of the payment, the utilities, you write off. But again, now
okay,
you got to keep up with the receipts and this and that.
right,
Whereas the simplified version, you just know the square feet, boom,
mhm.
you just take that times $5.
I like that better.
For many
Okay,
people, they like that simplified version because you ain't got
mhm,
it's less paperwork to keep up with.
okay. Now, do I have to do anything, use any other type of like the Schedule C, or I can just do it on my regular tax form that I do?
Your regular form, as I shared with the gentleman on the far right,
Mm-hmm.
your business, that's where it goes on a Schedule C.
Okay.
And then when you get down near the bottom of the Schedule C, there's a line that says business use of your home,
Okay.
and it'll ask you, do you want to use the simplified version or you want to go through the long drawn out version?
Okay.
but you need to know how much of the space you're actually using for business. Now,
Okay.
I'm not what I'm about to share with you. I'm not sharing with you to scare you, but as a field auditor, I've actually had to go out years ago to somebody's house who was claiming business use. I walk in their house and it was the bedroom. Well, was a bed in there. Did they have a table in there and a chair? Yeah, but
Mm,
they weren't using 200 square feet of space
right.
for the office.
Okay.
So be realistic in what you
Okay.
what square feet that you're
Good enough.
actually using, because you got
Okay.
to use it for business. Shannon asked a question earlier about grants. I'm gonna try to address that now for you. Can you still hear me, Shannon? Okay. If there's all kind of different grants. If the grant is based on you making profit, you ain't gonna qualify if you got a loss. So it just depends on the what the qualifications of the grant are. And like I said, every grant, just like a mortgage company, they're all different. Um, and so um, if you got a loss, maybe you don't fit into that grant until you start to make a profit. But you got to look at what are the characteristics or qualifications for the particular grant that you may be trying to obtain. Do they allow you to have a loss? It could be that they allow you to have a loss so that they can help you. So you just got to look at what is the qualifications for that particular grant.
All right. Now I have a question that came in from one of the gentlemen, Mr. Spence. He said, as a W-2 employee, and it might be the same what you've already
Right.
covered, but I'm gonna ask you. So as a W-2 employee and LLC entity with no projected net income, do I have to file taxes quarterly or just once a year with my W-2?
Okay, so they got the W-2 and they got the business, and they saying they had a loss.
Right. It's saying as a W-2 employee and LLC entity with no projected net business income for 2021, do I have to file taxes quarterly or just once per year with
Okay,
my
all right.
W-2?
Filing taxes quarterly is based on you making money. It's kind of like uh, I I'm gonna give you a scenario. As an employee, you fill out a W-4, and that tells them how much tax to take out.
Right.
So you can. I know people who say want to be exempt. Okay, they're exempt, but when we get to tax time, I've done the tax return and they owe $5,000. Now IRS is going to look at that and think, well, wait a minute, you should have had some tax withheld. So I'm going to charge you not just the tax, but some interest and some penalties. So quarterly taxes is based on you making money and feeling like you're going to owe some tax for that quarter. So to answer this person's question, they're getting W-2 income and they're likely to have some loss from no, they're not going to have to pay any file and pay any quarterly taxes because they're going to have some taxes withheld from the W-2.
Mm-hmm.
They would only need to fill out file and pay quarterly taxes once the business, they got the W-2, but let's say from the business, every quarter they're making, I'm just picking a number, $4,000 or $5,000. IRS would rather you pay some tax every quarter on the business rather than you wait until the end.
Okay.
You might want to pay a little bit each quarter. Because let's say you're making an additional $5,000 a quarter. So rather than wait until the end and paying tax on 20,000, it would be easier for you to pay quarterly tax on the 5,000.
Right.
Because now you're paying tax out of that quarter's money. If you wait till the end, chances are you probably have spent you probably have spent most of the money, but you're going to end up owing some tax, and you ain't got the money because you've been spending it all along.
Gotcha.
So paying quarterly taxes is based on you having additional income that you've earned for that quarter.
Gotcha. Now,
That
one
you
of the
didn't cover, that the W-2 withholdings didn't cover.
okay. Now, I've heard some notaries say that, you know, it's mandatory to do quarterly taxes. So I don't know if that's, and I've been meaning to ask you that. So is it, and I guess it's based off of each state, but some notaries are like, it's mandatory. And then they're stressing because they haven't made any money because they're just starting and they're trying to pay taxes on $0.
Right. There's no tax to pay on $0. If the state that they live in, see, again, different states are different. So if they're in a state where they say the notary is required to file quarterly, they would just fill out an estimated tax form and put 0 because they didn't have any income. They don't owe any taxes.
Gotcha. And what that tells me, well, that should tell everyone that's watching this video, you can't just go around listening to everybody. Because and this is one of the biggest problems, and I think most of the people on here agree with the notary business, is that there are people who are making statements based off of where they're at, as if that's the way it is across the board for everybody in business and all notaries, and they're not qualifying their statements. And that's why I keep sharing with y'all, you have to take responsibility as a business owner that if somebody is sharing information with you, you need to make them qualify those statements. What do you mean I have to, it's a must that I better pay my quarterly taxes? Well, I'm just saying that, well, in my area, okay, that's what you meant, in your area. Just like some people say, oh, well, you don't need a business license. And I tell them, I said, well, find out from your county. Because if your city or county says you don't need a business license,
because some don't.
Right, then you don't need one. But I know in Virginia,
you need to have one.
You got to have a business license, and you roll up into a bank trying to open up a bank account, and you don't have a business license, you don't have an EIN, and you calling yourself an LLC, and you don't have them state corporation papers, they're going to think you're money laundering. And I've heard notaries being told that, what are you trying to do? What you launder? And they have a right to ask you, why are you trying to open up a bank account and you have no paperwork? And the only thing they can do is set you up as a sole proprietor trading ass, and then you get caught up and never go and switch it back. And now your tax bill and your liability is through the roof. So that's why I always tell people, and I say it here, get your LLC first. Let me put it over so you can see my number. LLC first, then get your EIN, which you can get free from the IRS.
Yeah.
Once you have your LLC paperwork from the state, single member or partnership, then you get your EIN from the federal. Then you go locally, at least in Virginia, you go get your business license, and you have to have the first 2 pieces of paper with you when you go get your business license. Right. And after that, the 4th thing you can then do is get your business bank account.
Right.
Too many people run and get the EIN first. Then they go and try to get the LLC and find out that LLC name is gone, which means you got to go get a new EIN to match with the LLC. Then there's people who get the EIN, run to the bank and try to open up a business bank account and calling themselves an LLC, and they don't have any LLC paperwork, or they try to go down to the city to get a business license saying I'm an LLC, and they don't have the LLC paperwork. So, or a EIN. So only thing they can do then is set you up as a sole proprietor, because that's literally what you are at that particular moment, because you have no proof from the state or federal that you are that particular type of business. So notaries keep jumping out there, and I won't say notaries, individuals who are trying to start a business, keep jumping the gun and trying to do things in such a way to hurry up and get there, because everybody is worried about hiding their social security number. So the first thing they do is, I'm gonna go get an EIN. There's nothing wrong with that. You get an EIN all day long, every day. But the moment you start that LLC, if that name is gone, you're gonna have to do something different. And then for you, Terry, you can check with your state, and this is for everybody, because the state sometimes allow you to reserve your name. You can put a hold on that name so nobody else can take it. In Virginia, it runs $10, and you can hold it for 4 months. And then every month, and then once you're about 45 days before it expires, you pay another $10, and it'll hold that name until you're ready to use it. So you can lock up a name for years until you're ready to use it. If you're like, this is the name that I want, you just have to pay that holding fee to the state, and it ain't like the state going to tell you, stop giving us $10 or $20. They gonna, it's been 5 years. When the state is not going to sit there. When you going to go on to do this thing, Terry, the state like keep giving us that money. Yeah, and that's what you can do. You keep doing it, and that way you can hold the name, and nobody else can take it until you have all of your other items that you want together straight. So I think Shannon and then Mampton had another follow-up question.
Okay.
Yeah, we can hear you.
Okay. I have a question about witness fees. So typically, when I do closings for properties in other states, it requires a witness. So I have a couple people, friends or family, that I call to be witnesses, and I pay them $25 each for each closing. But I know from my regular job, if you pay somebody $600 or more, you have to issue a 1099.
Correct.
So I did the quick math, and that's 24 closings at $25 equals $600.
Right.
So is it smart to kind of like split up who I'm using as witnesses so that they don't take on that tax liability? Yeah. Because these are like family and friends. They're doing me a solid.
Right. Yes. Because ours, keep in mind it's your business. The rule says if you pay him over $600, you got to issue a 1099. Now, so if you pay them over that, you got to issue a 1099, and then they got to put it on their tax return.
Right.
So as you're saying, I would split it up so that you stay under that number.
And another question, sometimes notaries use each other as witnesses. So should we be asking for their W-2s at the time that we use them? Or maybe once we get notice we're getting closer to that $600? Because not everybody wants to give up their tax information like that, or their social security number.
Well, I'm gonna share this with you a different way. You go to a job and apply for a job. First thing they're gonna have you fill out is a W-4. Now you can tell them, "Oh, I ain't filling that out." They're gonna say, "Mine next."
Right. Gotcha.
In order for you to take the deduction, if you're planning to use that notary, they got an additional revenue stream is what they got. Right. And if you pay them over $600, or if you think you're going to be using them regularly, you need to ask them for a W-9. Don't just ask them for the information. Ask them for a W-9. The W-9 is what they fill out. Same thing you had to fill out and send to the title company. You're entitled to, if you're going to be paying somebody and you think, this seems like it's going to be going on, not just one or two times. We might do this regularly. Because if you wait till later, they ain't giving it to you.
Right.
That's true. Okay. Thank you.
And are you good on your question about the grant stuff and the carrying the profit and loss?
Yeah. Oh, yes. Just to piggyback off of that, because I'm trying to determine if I want to just go ahead and not carry the loss. Like I didn't make a ton of money, but sometimes it might be better to just pay the taxes on the money, not really claim all your expenses, so that you can qualify for like SBA programs and stuff. Because a lot of the programs do want to see that you made a profit, not that you really had a loss, unless it's COVID-19. Oh, right. Sorry.
Well, that's a personal choice that you're making.
Right.
Yeah.
So I just have to weigh it out and go from there.
If you can get your hands on $10,000, $15,000, $20,000, you weigh that out. Do you want the tax benefit, or do you want to get this grant that'll help you, get further along?
Right.
That's a personal decision that you've got to make.
All righty. Thank you. I appreciate it.
Yeah, I'll answer Ishmael's question about the quill. Can you hear me?
Yes.
Okay. You get to deduct when you buy something.
Okay.
So when you buy the paper, the staples, the erasers, whatever, that's when you get the deduction, not when you pay it.
Okay.
You just have an accounts payable.
Yep.
But what you bought the paper yesterday, so you may not pay for that paper until 6 months from now.
Yeah.
Or you may not pay the paper this year.
Okay.
You get the deduction. They sold you that paper, and you paid for it.
Yeah.
What you have, if it's on a debit card, they're getting the money right now.
Yeah. Yeah. It's on my business debit card.
Yeah. So if it's on a credit card, you got that deduction because you just bought it yesterday. Now, when you pay it, that's a whole different thing.
Okay.
You get to deduct it when you bought it.
All right. Sounds good. Looks like I have some homework to do. I have to go through my accounts of everything I paid this year.
Yeah, everything, even if it's on your debit card, it'll be in your bank. It'll be in your bank statement. So you go through your bank statement, and you can tell from what the names are, the businesses. You may not remember if it was pencils and erasers or paper, but if you went in Office Max, it was office supplies.
Yep.
If you went into USPS, it was postage.
Makes sense. Thank you.
You're muted, Griff.
Look at him running the show for me. And y'all probably was waiting. I know y'all was waiting. Like, it's gonna be one time Griff gonna start talking. He get muted because he always does it. And I was trying not to. Well, now here's one of the other things that notaries need to be mindful of. All of the money that you made in December, you might not getting paid for it till January. It doesn't come to you to go in as payment until January.
Mm-hmm.
And if I'm not mistaken, that's when you count it. You count it in the year that you actually received it.
Yeah, that's correct.
So yes, you may have made total $85,000. Oh, that's how much work you did. For the month from the 2021. But what you actually had recorded that you had received payment on that you got from all of the companies might be 80,000, because if you did 5,000 in December, but you might not get, you won't be getting that 5,000 until the next calendar year.
Yeah.
So, and that goes into like when you're setting up with some companies, are you doing a fiscal year or an accrual or calendar year method of your accounting and all of that? And that's why you need to communicate properly with an accountant to make sure that you're talking to them how you want to account that money, or your pay cycle, or your fiscal year. That's what I'm trying to say, your fiscal year and everything. But if you're doing it on a 12-month calendar cycle, if you made $20,000 in revenue in December, but all of that stuff doesn't hit till they pay in February, March, because it's on a 45 or 30-day thing, you can't be sitting up here saying, I did this amount in last year, and you really made it, or got finally compensated the following year. Am I correct or incorrect on that?
That you're correct, because most 99.9% of the people are on the cash basis, which I think y'all are. So when you get the money, that's when it's income. And like with Ishmael, when you bought the paper, that's when you get the deduction. When you paid for it, just like on the front end, you went and did the signing in December. You got the money in February. Mm-hmm. That's when it's income to you.
That is correct. So any of y'all have any other questions? Anything? You good, Q? right, Miss Terry.
I'm straight. Thank you.
All right, Miss Shannon. All right, Ishmael.
No, I think I learned a lot throughout this this webinar, and most of my questions were answered, and I will definitely be in touch, Mr. Turner.
Okay.
All right, sounds good. Thank y'all. I'm gonna just set y'all in the
Thank
green
you.
room so y'all can keep listening, and we're gonna close out. So, everybody, we're here just trying to help you to get your brain going in the right direction for your taxes.
Yep.
Again, we're not saying that you have to use Mr. Turner. We're not saying that you got to stop this, start that. But everything that he shared is something that you have to have in your life, okay, with regards to this business. Okay, you got to have it, whether it comes through him or someone else, or you do it yourself, or QuickBooks or slow books or medium speed books or whatever book you're trying to use for your accounting. These are standard things that you have to have in place, and questions you may be asked on your tax return. So we're just putting a face to it and an actual live voice to communicate that to you. Now, what you do with that information is completely up to you. Okay. Now, if y'all got questions, his information is somewhere. There it is. His information is right there on the screen. I also wanted to show y'all, and as I told y'all, this is his website. And let me share my screen real quick. Like, probably should have had that already set up. All right, this is his website. He also does credit repair for those who may need that. So you get there, you click on either this graphic for Hampton Roads Credit Repair, or this one for his accounting. This here is his credit repair. This here is his accounting. So go there and select which way you want to roll, and you'll be taken care of. So any final words, Rob?
You know, they still have a little bit of time. I just would encourage everybody to, you know, help themselves out as well as helping their accountant out by gathering this information together. It'll get their tax returns done much quicker, because they'll be providing some of the key information that the accountant would need. I'll be glad to help them and teach them and do all I can to help them get to a better place in their business.
All right, sounds good. Well, that's it for today's episode, boys and girls. but we'll hit y'all back up later with some more information, some more questions about taxes. And again, if you got questions, look, hit the comment section, ask your questions, things of that nature. Again, it's all about helping y'all to be successful and to move forward in your business, because I don't want y'all making all this money like everybody keep telling you can. You can make $20,000 a month, and then you paying $80-some thousand, in taxes and stuff, and you ain't got nothing to, to take care of little man and TT, and then your wife or your husband getting upset with you because you done made all this money, and now they got to take everything they done bought back. And once you wear them red bottoms, they not taking them red bottom shoes back. Okay. Okay. They not taking them back. Certain things that you buy, you can't take it back. Okay. So if there's nothing else, I just want to again thank everybody. Rob, you just hang on and don't hop out yet. And same thing for those in the back office. Y'all just hang there for a second. But again, thanks for everybody for tuning in. I really appreciate it. Y'all have a good one. Peace.